Hello and welcome to Moneylife News and Views. I am Debashis Basu. The market watchdog, Securities and Exchange Board of India, has told stockbrokers not to allow algo makers to claim extraordinary returns and then pass on the algos through their terminals. Now, algo trading, as we know, is a computerized program trading, and this has been developing like a wildfire over the last 2 years during lockdown and subsequently millions of new investors having entered the stock market. They all need stockbrokers to pass the orders onto the marketplace because stockbrokers act like gateways and they have been claiming great returns. It's good that Sebi is at last attempting to stop such misleading claims. But if you look at it closely, is promising extraordinary returns really the main problem with the algos? According to me, the problem is much deeper and very basic, which is algo trades, the way it's being conducted is completely illegal and it violates Sebi's investment advisory regulations of 2013. I'll read out to you what exactly the regulations say, okay, and you will very clearly see where the algo trading comes into play. That is retail algo trading. The advisory regulations of 2013 says any investment advice, it defines investment advice as advice relating to investing in, purchasing, selling or otherwise dealing in securities or investment products, and advice on investment portfolio containing securities, whether written, oral or through any other means of communication for the benefit of the client and including financial planning. Now, what are algos doing? They're advising buy and sell. As simple as that. So if they're doing that, they're all supposed to register as RIAs. If not, they're all illegal. But are they registered as RIAs? Well, almost nobody is. None of the algo makers are registered as RIAs, and the reason for that is very simple. It is extraordinarily tedious and bureaucratic and difficult job of maintaining the compliance standards and records. Not only do they have to sort of record suitability and rationale for every single investment advice that anybody gives, but they've also got to sign long 20-30 page agreements with clients. They have to get a yearly audit done and make enormous disclosures to Sebi and retail clients. And none of the algo makers are doing any of this. So they are all illegal. It's very obvious that in a rapid fire environment, we'll take just one small point about this, which is suitability and rationale. In a rapid fire environment where you're constantly telling clients you buy this and sell that, where is the question of maintaining the suitability and the rationale and risk profiling of any of this? It's just not physically not possible. The thing is, it doesn't stop there. It goes much further. There is a platform called TradeTron, okay, and that openly violates Sebi's portfolio management services guidelines as well, or regulations as well. Now here is what TradeTron promises its users. Realize your dream of being a PMS provider. How? TradeTron will ensure its strategies will get executed all brokerage accounts of your subscribers at one go, regardless of whether there are 3 or 3,000 in different quantities across different brokers. Now, despite such glaring violations, both of Sebi's investment advisory regulations of 2013 and PMS regulations, which have become very, very strict in 2020, January, all these things are thriving and Sebi has done nothing to stop them. And yet Sebi comes down very harshly on anybody, on the regulated people, the advisors or PMS providers or whatever, even if there are very minor mistakes that they make. The question is, why is Sebi hesitant to control the rapidly growing illegal retail algos? Because my view is that because they have become just too big and too pervasive. Too many brokers, too many platforms, too many investors are actually involved in this. Indeed, according to me, retail algo is only a small part of the total illegal investment advisory that is thriving. And I'm not talking of the indoor-based, those tipsters who take your money and run. I'm not talking about that kind of illegality. This is all open and above board, done by genuine people, but they're not compliant because they are not registered. Okay, Now, I'll give you a list of various ways in which illegal investment advisory business is being carried on. Before that, funnily, a small aside, all registered investment advisors are supposed to pass an exam of NISM, which is National Securities Market Institute. And NISM course material very funnily says that before RIA regulations came in, distributors, share brokers, insurance agents who all could act as advisors, they are no longer can act as advisors after the regulations came in. Now, not only the funny thing is that not only are all these people acting as investment advisors in reality when they're facing the customer, but a lot more new types of illegal advisory activity have also joined in, and retail algo is just one of them. I'll give you a list of the various ways in which illegal advisory business is thriving. So joining the bandwagon is not only the brokers, the insurance agents and the distributors, but now algo writers, websites, online platforms like Smallcase, numerous Telegram channels, and 2 new apps, which is Rigi and CosmoFeed, where unregulated people are minting money offering advice on option, futures and stocks. Probably Sebi is unaware of all this. So actually, after the regulations came in, the type of people who are openly and genuinely offering illegal advice that is illegal is actually expanded much more. They are all violating SEBI's investment advisory regulations. Collectively, my guess is there are 100 times more people offering advice than regulated advisors, and the client base of these people, of course, are in maybe 1,000 times more than the regulated investment advisors. Actually, nobody wants to take investment advisory license anymore because of all the restrictions, whereas these people outside that, through social media, Telegram channels, apps, these people are thriving. Now, the question is, what is a way out? When an illegal activity of such scale and magnitude thrives, it's worth stepping back and asking, is it good to ban all of them, crack down on them? That would seem to be the logical thing because, there is a law and people are violating, so SEBI should go after them. But I take a slightly different view. I feel that the fact that, there are thousands of these people who have come about genuinely thinking that they're helping customers and doing a good job of advising, that seems to me is really a lesson for all of us. It's a kind of writing on the wall. Now, I'll tell you where all this is coming from. According to me, the market has exposed the limitations of SEBI's antiquated and stifling RIA regulations, and actually it's an opportunity to align the rules with the reality of what actually investors want. After all, regulation should be built around products and not the other way around. So what do customers want? The customers really want a buy-sell advice. All right. And it is ridiculous to put so much of onerous burden on advisors to just do this small thing. In fact, SEBI investor regulations are built around academic theories about financial planning, which nobody wants. Whereas customers want buy-sell recommendations, which is the main activity of the investment advisory business. This is what every investment advisory and unregulated entity provides, without bothering about the impossibly complex compliance and restrictive regulations. So, the writing on the wall is absolutely clear. We need a new paradigm of regulating advice. SEBI would do well to restrict the investment advisory regulations for financial planning, which was the original idea behind this. But whoever wants financial planning, the small, tiny, infinite, small number of people who wants financial planning, let them go through this process and let there be all this, agreement, suitability, rationale, blah, blah, all of that applies to that part of the advisory business. But 99% of the people do not want that. They want buy-sell advice, and so it is important to face the reality. Whereas, advisors, research analysts, algo writers, app-based tipsters, stockbrokers, distributors, they're all offering advice, stock advice, buy, sell. So if that is not brought in under a separate regulation or guidelines with a very minimal compliance, this dichotomy is going to thrive. So illegal supply, so-called illegal supply of buy-sell advice by regulated and unregulated players rising up to meet the demand of the customers will actually make a farce of Sebi's archaic investment advisory regulations, which is actually meant only for financial planning. I hope you liked it, and if you did, please do subscribe and also share the video. Thanks for watching.